Let's get to the advisory now. And there has been a lot of market turmoil as of late, with big questions being raised about the state of the global economy. So should you, as an investor, be making any rash moves? To get some perspective, Glen Hare from Fox & Hare Financial Advice joins me now. Glen, hi, welcome. Thanks for joining us. Hey, look, in your experience, are, any of your clients, are investors, getting a bit nervous out there?
Definitely. So the last couple of months, various reasons have been pretty challenging when looking at the overall market position. And, we're getting a lot more members reaching out at the moment, asking questions, should they be making moves? What should they be doing? Is now the right time to invest? Should I be selling? What am I doing with my super? So certainly the volatility in the markets is creating a lot of uncertainty for investors at the moment.
Okay, so how then do you advise to keep calm and carry on?
Yeah, great question. So, through education is really how we approach it, and really what I'm hearing and some of the questions that we're having filter through from our members is one around superannuation for our member base, given that they aren't going to be accessing it for 20, 30 years, we still are looking at a high growth strategy for those members. However, it's probably the first time in quite some period where they've actually seen their super maybe drop off. But what I'm really mindful of is for those that are looking to potentially move their super funds into a more conservative portfolio for the risk of, or the concern of, their super balance going backwards. The risk is that all future contributions that your employer makes into your superannuation is also going into that same conservative portfolio. And what that essentially means is not only is your existing investment into a conservative portfolio, and when the market recovers, which is we've certainly seen some recovery over the last couple of days, you're sitting in something conservative and not taking advantage of those growth assets. But coupled with the fact that those ongoing contributions that your employer is making into your super fund, it's also going into that conservative portfolio, meaning that ongoing investments, we're not taking advantage of those lower price points.
Okay, so you would advise against going too conservative because of the bout of volatility that we're seeing now. What else is a concern for you when you're looking at, I suppose, some of the potentially rash moves that people can make when they're feeling uncertain?
Yeah, people stop investing, Nadine. So, now is arguably there's a lot of opportunity in the market, and there has been for the last couple of weeks. If you've got a secure job, a secure income, you're really across your cash flow, and you do have surplus income on a monthly basis, or you've got cash savings. Arguably, buying in now, you're going to get it. You're going to get in at a lower price point to have you had bought 12 months ago. So, on the flip side, although we've got some, members that are reaching out and are quite nervous, we've also got, I suppose, the other side of the risk appetite where members are reaching out and going, hey, I've got a bit of extra cash, or, I've been saving money in my offset account and interest rates have come down a little bit. It's not working as hard as it used to. The market's dropped off. Should I be considering making, some larger investments to take advantage of that downturn?
Okay. Now, is there a risk that people just sort of plug their ears, close their eyes, look away, and they might be surprised when they come back to it at some later date?
Yeah, unfortunately, option fatigue is real. So there's so many options in terms of what we can be doing. Should I be buying? Should I be selling? Should I just be saving more cash? And a big challenge that we do see is people default to kind of doing nothing. And doing nothing is a decision. It just may not be the right decision. So, we really encourage everyone to really think about their current position and, take into account the state of the global world, but also your personal situation. And if you do feel like there's stability in your household, then you should be, making proactive decisions with regards to how you're managing your money rather than putting this on the back burner. Because the reality is, if we were waiting for stability in the markets or our geopolitical landscape, then we may be waiting forever.